314.18. You want to have liquidity. You want to be able to fill some size. We finally get a stock that has good range, good volatility. At the same time, great volume, and awesome liquidity for us to get in and out. Not have to worry about fills, slippage or anything like that. Today's opportunities, as you can see, finish the day up 20 grand. Off small positions. Did 2,500 shares one time. Another time where I did 1,500 shares. But the majority of my trades were 500 shares. The occasional 1,000 shares. And there are some 250 shares. Minor shares. Scalps. 250 shares. I'm padding the wallet. The beginning of the video. 2,500 shares. Where I make a quick 9 to 10 grand. The remaining amount of money was made off small positions. 500 shares, so I essentially made $10,000 of my $20,000 in profits on Arcada off just using 500 shares. Once in a while, sometimes as low as 250 shares. These things add up. 250 shares. You catch a $2 move, $3 move. That's 500 to 700 bucks. Definitely on a stock like this. Multiple opportunities to get in and just scalp that move over and over again. Just wait for the Washington. Don't follow. Don't take a gamble. Don't get dumped on. Wait for the dip. The thing about Arcada today and why I loved it so much was that it followed support and resistance to a T. If you watch this thing, every single time it broke out, you got a dip right here. It's wick on this candle holding this support level around 37. Even on this grind down, it held on this 35 level. And once 35 broke over 40, and then once it broke over the high of 48. This thing was a dip buy against all of these prior support levels. Dip buy here, dip buy here. Even 50. But then toward the end of the day, gets kind of risky. Usually dips a lot more than you think. So I decided to scalp it against the second support level, which was the prior high of the day, from the morning. 13 million shares liquidity. Repeat and rinse. $1 per share pop. All out. $17,000 profits. 3 minutes. 4/6/18. Washout long. 20.3K in 21 minutes. Crazy day in the market today. We got squeezes, we got halts, T3s, T12, a little bit of everything. And of course the classic washout long. How I trade, I just go in and out, take my money and run. I don't really care how these companies really are behind the scenes, trading small cap stocks. Just observe the price action, look at the volume, and just ride it until it lasts. Dolphin went from $10 to $8. It was going to bounce at some point. I was pretty much waiting for this thing to gain some traction, and we finally got it yesterday, and a nice volume. Largest volume candle that Dolphin had. You can see that a lot of people jumped in, although there's a lot of bag holders on a long side. There were so many people that were shorting on the downside, dropped from 70 to 8 without a bounce. You can understand that a lot of these shorts that were holding on to this, didn't really cover yet. 15,000 shares. Trading for 7 years. I have confidence in my system. Wash out long in the open. Halt resume. Wash out long. Intraday and a little smaller regular intraday normal wash out longs. Regular tanks and balances. They're all conceptually the same. They're all caused by shorts that are stuck and they got to cover their stock, and it causes a balance. And you got the longs that jump in as well, adding some more fuel to the fire. Statistically speaking, this is a game of probabilities. T12. Halted scan. Wait for the dump. Don't get dumped on. You're better off waiting for the solid washouts to get in. Don't chase it, and scalp the stock. Don't hold it. If you hold the stock, you're going to get exposed, and you're going to get stuck. FOMO. Jump in and get stuck in a grind. I'm waiting for a dump at 25, which is where the pre-market highs was along with around close to where VWAP was. I was looking for this thing to run to 30. 31, which was the next resistance. And I was waiting for this thing to dump to 25, got a downside halt to get a gap down resume, and then 25 inches, sell 27.28 or something like that, and bank off. That trade, creme de la creme grade setup, 10.17.18. 569.69% move. Life is not worth living if you just stare at a computer screen 24/7. I wasn't really taking it seriously until it broke 4, because that's when the candles starting getting a little bit bigger. You noticed the size of the candle. The range of the candles are getting wider and wider. You saw every single time we got more range, more volatility. The volume picked up, more consistent volume, as opposed to more intermediated spikes, followed by low volume, high volume, low volume. You got more consistent volume. Then you got some bigger washout opportunities that gave us some really good plays. For instance, nice little wash from 630 down to 520. Nice 1-point dip. Once the stock picked up, you started getting bigger washes. 1-point washes, like huge wash from 11 down to 930. So that's what I was looking for. I get really excited once this stock really started getting some nice range on each candle, and nice volume, nice liquidity, nice volatility, some good opportunities all round for us to just jump in on the dips, make quick 50 cents to $1, maybe even more. I was doing 500 shares, 1,000 shares tops on these washes, and I still ended up making $3,300 on Yago. You don't even need to go major size on this. 500 shares on this stock at $10. That's $5,000. You go in 500 shares, as you capture 50 cents. That's $250. You captured $1. It's $500. The opportunities were there, all you guys with small accounts to grow. This was an account growing stock. All these dips, mega washes. By the dip, the line in the sand toward the end of the day was between 850 and 9. This stock never cracked it. It was still long the whole way, longing these dips. Obviously, as a stock gets higher and higher, the risk does increase. So you downsize. Small size trades really add up. Making $200 over and over again. $300, $400, $500. Do that a couple times. You're up a couple $1,000, guys. Keep it simple, stupid. Kiss. Don't swim against the current. The overall trend is up. Just buy the washes until the trend changes, and then short the pops. It's all there. Realize to keep it simple, stupid. Long the dips on the uptrend, short the pops on the downtrend. Got it? No blow up challenge.